Good day everyone, welcome back to the channel. In today's video, we are going to look at a few Nasdaq and S&P 500 trades, how we can use SMT divergence, how we are going to use the break of structure, how to enter our trades, and how I look at the market, especially just after New York Open, to see exactly which pair we are going to take a trade on. Are we going to take a trade on Nasdaq or are we going to take a trade on the S&P? So, with no further ado, let's get straight to the charts and let's look at some examples. Let's say, for example, we have our London session and then New York is going to start at 9:30. So, this is going to be New York Open. So, let's say, for example, this is going to be Nasdaq, NAS100, and this is going to be the S&P 500. So NAS100, S&P 500, and then New York Open here for both. So let's say, for example, London session has done this. It goes like this. Asia, London, and then in New York, when New York Open, let's say on Nasdaq, it takes liquidity and moves down. But on the S&P, when we have our price in New York, price goes up, but does not take the highs like in here, but price goes down. Now, this is what we call a SMT divergence. So we're going to look at the lagging pair. In this case, it would be Nasdaq because Nasdaq is pushing up. S&P is pushing down and moving more down than Nasdaq. So we will probably take the trade on Nasdaq and not the S&P. So basically what a divergence is if one pair, for example, makes a lower low and the other pair makes a higher low. So here you can see exactly like that. And this one does that. So the one is making lower lows, the one is making higher lows. Same vice versa. When we have one that's making higher highs and we have one that's making lower highs, then we have an SMT divergence as well, like that and like that. We want to wait for a liquidity sweep on one of the two, S&P or Nasdaq. So when we have our New York, for example, we want to wait for a push and then to take the liquidity and then continue down. But the SMT, we don't want that sweep. We want to have a lower high for, in this example here, and we want to have something like this. So we want to see something like that. So let's jump to the charts and let's look at a few examples. So let's look at the 7th here quickly. We are on the 15-minute. So let's just mark out 9:30 on New York Open. Let's go to Nasdaq. Let's also just mark out on the 7th. New York Open was 9:30. Okay. So let's look at these pairs. So here you can see on Nasdaq, we had a sweep above the London high right over here. When New York opened, we immediately had a sweep right over there and then price pushed down. When we look at the S&P 500 on that day, we can clearly see London high was right over here. The S&P never took out the London high, but on Nasdaq, the London high is taken out. As you can see right over here, right? So let's go down to the lower time frames and then let's see where you could have gotten your entry. So I'm just going to split the screen so we can see both screens at the same time. So here you can see we have our Nasdaq right over here and our S&P right over here. So let's go down to the 5-minute. Right, so here you can see on the 5-minute when New York opened on Nasdaq, we had initially a little push. We came down exactly here, a little bit of a push. We came down. Then we had this big move towards the upside. This was at 10 o'clock. 10 o'clock, this was a lower high. So here you can see from there till there, we have our SMT Divergence right over here. As you can see, higher highs, lower highs. So we wait for the sweep. Perfect. Now let's see, where is the last low created right over here to be taken out to confirm a break of structure. So it was this low when price pushed up on Nasdaq. Here is the low on the S&P. So here we can see now low was created. We created another low right over here. This was at 10 minutes past 10. 10 minutes past 10, price was already down here. On our Nasdaq, it was still up here. So now we can already see S&P 500 is pushing down. Nasdaq has not pushed down yet. And this is literally a lagging pair. The other one tells you exactly what the other one is going to do. So the S&P was pushing down. Nasdaq hasn't pushed down. Here we already broke break of structure right over here on the S&P at 5 minutes past 10. At 5 minutes past 10, we were still right over here. The S&P already broke structure right over here. So now when we have a break of structure on Nasdaq, we are going to enter our trade because the S&P is already pushing down. So when you enter there on the 5-minute, you can put your stops about around there at this high right over here. And we can target a 1 or 2 fixed risk to reward trade. When we zoom out, you can clearly see this trade was perfect because we had this divergence on the S&P and Nasdaq. S&P was moving down, and then we had our entry here on Nasdaq, and we had a beautiful sell. All right, let's actually look at today's price action. This was the 13th of August, 9:30. So let's just mark out 9:30. So as of the time of this video, this was today's price action. As you can see, here's the live market. So let's see what happened on both pairs. Both pairs, right, went up at New York Open. As you can see right over here, London highs was taken on both pairs. Currently, Asia lows has not been taken on the S&P 500, but is taken here now recently, the last 30 minutes on Nasdaq. But let's see at New York Open what happened. So where was our last low on the S&P? It was this one right over here. And where was it on Nasdaq? It was this one right over here. So let's quickly have a look. Both pushed up at 9:45. Nasdaq broke through and we had a break of structure. 9:45. At 9:45 on the S&P, we were still far away from this low to be broken. We were still here. So who is the lagging pair? It's going to be the S&P 500. So Nasdaq is telling you what the S&P is going to do. as you can see right over here, Nasdaq was already far away here when the S&P broke this 5-minute low. So let's go down to the 5-minute and see if we can find an entry right over there. Then again, let's just refine this for the 5-minute. So this is our 15, 15. So let's look at the 5-minute. Here was our last 5-minute low, and we don't have a 5-minute low right over here. It's going to be this one right over here. So again, Nasdaq took out the 5-minute low, took out the 15-minute low. The S&P was still above here. So Nasdaq is already telling me, all right, this is happening. Price is going down. Here we had our break of structure right over here. Why? Because we have a down candle, up candle. So this is most recent low. Next candle, we broke through. You can put your stops right over here or there if you want to be conservative. And you can target a fixed 1 till 2 risk to reward trade. And let's see how it plays out. Currently, we are still in this trade technically. And yeah, Nasdaq already took out the Asia lows. So where would be a good target for S&P? Right over here at the London lows would be a great target for the S&P. And this is how you can take your trades, find a lagging pair, look for the SMT divergence, and then you can follow your strategy on how to enter on these pairs. All right, everyone. So I hope you enjoyed this video. Please leave a like and subscribe, and then I'll see you in the next video. Cheers.